Hey, welcome back to Two Super Guys Trade Stocks. I am Dylan.
And I'm Vinny.
And Michael Burry said a very long time ago that PACW is different from the regional bank pack. After these earnings reports, FRC, PACW, they are night and day. We said Monday that there may be a run on FRC. It looks like it might happen. Take a look at this. Two Super Guys Trade Stocks. All right. So this was the tweet a long time ago, right? This was before Signature Bank closed down. Okay. So here you have SIVB at the top right corner. Signature is SBNY, and then FRC is in that red circle there. PACW is also in that red circle. What this is showing is unrealized losses versus deposits over 250K. Now, since this tweet was put out, the Federal Reserve is like, hey, results over 250K, don't worry about it, right?
Yeah.
These two earnings reports were insane. And full disclosure, I sold my PACW because FRC came out first, and it did so bad. I sold it for break even. I made $8. And now it's still at where I was. So just brief history. Here's a First Republic credit?
First Republic Bank, yeah.
First Republic Bank. So 120 down to $14 range. I had to do a 16-minute chart because it's hard to see how much this dropped off because they dropped off so much. So here's the 60-minute chart. They just getting hammered. They lost another over 50% in 2 days. Not good.
Yeah.
They had their earnings call. They only had 12 minutes of remarks and declined to take questions.
That's fascinating. I don't think I've ever recall a single episode of a company not taking questions in their earnings call. That's a new one for me.
It's just like, I think they're just like, all right, we're fucked.
Yeah.
And then one of the reasons for that is probably this, right? Regional bank received a $30 billion lifeline from big banks last month, but they're still, losing a bunch of stuff. They had $102 billion in customer deposits lost. But let's get into the details here, and then we're gonna look at PACW because opposite story. All right.
Okay.
So
Nice.
here's the balance sheet. Right. Loans totaled $173 billion, up 22%, but not really. Deposits were $104 billion, down 35%. And borrowings, they didn't even do a percentage because the percentage is like 2,000%. So
Oh, Jesus. That's great.
they just put, we're 106, up 101 billion. So solid. Way to go. Let me move our faces here. This is from their investor relations report. You don't have to read all that. Doesn't really matter. But basically, just the red, the total deposits from a quarter before, they lost. They went from 176 to 104. Short-term borrowings, not long-term, short-term, 80 billion, and then long-term, 26 billion.
Man. That
So bad.
Wow. Yeah. This reminds me of like one of those people you see at like a pier, like juggling chainsaws. That's basically what they're doing, I'm pretty sure.
Dude, it's awful, right? And that's why they've lost 50% in 2 days. Now, this looks like a busy slide. Really just read the red here. So on March 16th, First Republic received uninsured deposits totaling $30 billion from basically JP Morgan and someone else. Down here, total deposits were $102 billion as of April 21st, down only 1.7% from March 31st. Okay, that's important. All right.
Yeah.
So we had this thing March 16th. They got hit crazy, crazy hard. And then as of March 31st, it slowed down, but it continued. They're still losing. Okay. That's important.
Yeah.
They're not losing a lot, but they're still
2%
losing.
is not.
It's important for PACW. There's a very different outcome here. All right. And then
Gotcha.
I thought this was interesting. In response to the unprecedented deposit outflows, the bank enhanced its financial position through access to, JP Morgan, Federal Home. Total borrowings peaked March 15th at 138 billion. At that time, the bank had 34 billion in cash. Total borrowings were 104 billion. Cash and cash equivalents 10 billion. It's disgusting. It's just, I don't even understand. It's so much money. What are you looking at?
I'm trying to understand this right here. So now they're saying their cash position is down $24 billion from March to April 21st here.
No. That's 25.5 billion of long-term advances from Federal Home Loan Bank.
No, but it says total borrowings
Let me
total
go back.
104 billion, cash and cash equivalents total 10 billion. So
Hold
they're
on.
saying that their cash and cash equivalents position has been like hit by like 24 billion since like this whole run, if you will, a little bit.
Oh man, I wish I had it on the slide. It's
That's
possible.
right.
I honestly only cared about the deposits.
Hmm. Gotcha.
This was the one thing I was just saying is that essentially March 31st to April 21st, they're eroding. They're still very slowly, but they're still going down.
Tax
Let's
payments.
look at
Okay.
PACW. All right. So
Yep.
PACW, $28 to 10-ish. They dropped as low as 4 for a little bit. Let's
Wow.
look at their 60-minute chart.
So not
Non
quite as egregious, but still pretty significant, steep discount from where they were trading prior to the
Yeah.
banking crisis.
No, well, definitely not as egregious. That was insane. You can see their earnings bar, right? It's the huge one right there. They actually
Hmm.
went up. They did leak off throughout the day.
Yeah.
So here's their deposits. Okay. So 12/31 to 3/31, they lost 4.5 billion. Okay.
Okay.
During that time, they immediately got rid of. They liquidated some assets that they could. They talked about it in their actual investor relations report. Quarterly report, to get another 4 billion on hand ASAP.
Nice.
Right.
Yeah. Oh, very wise.
So total deposits increased 1.1 billion to 28.2 billion, compared to 27.1 billion as of March 20th. So what they're saying is basically as of before April 24th, from March 20th, they actually went up 1.1 billion in deposits. Okay?
Okay. Nice.
Then further from April 24th, they also got another 700 million. So they just threw that in for the day after they report earnings, right?
Hmm.
It's not the same story. They're not at risk like FRC is, because FRC is getting fucking shitted on. And then they have, just because they also went to get cash very quickly, their immediately available liquidity, on balance sheet liquidity, and unused borrowing capacity exceeds uninsured deposits with a covered ratio of 153%.
Okay. Well,
Yeah.
that is night and day compared to FRC, huh? Wow.
I mean, it's definitely a lot more responsible. And then here's their recent deposit trends. You can see essentially their uninsured deposits decreased, their insured deposits increased.
Hmm. Yeah, okay. I guess that makes sense. So those that are at risk of being over that limit would be wise to be diversifying across multiple banks. So that makes sense.
Right. And it was also kind of weird that this is the most insured deposits they've had. Well, I mean, it's only one quarter, but still. So begs the question, they're still down over 50% from this whole fiasco, from this whole thing that's happening, right? It's not safe still. Like I said, I sold my 200 share, and it's not that much, but 200 share stake after FRC reported because I was like, nah, this is not worth it. But it seems like it could be an interesting long. They're not at risk like other companies. What are you thinking?
Yeah. Yeah, no, I went back to the slide actually that you had put up that little chart. And so tangible book value, their calculation is 1866 a share and has actually increased, right? So like that in theory is what a bank often trades at is about par, except for Citigroup because screw Citigroup.
Citigroup's a
But
nightmare.
yeah, exactly. But yeah, I mean you're picking them out that probably close to like a 50% discount from what their book value calculation is. So, that's a reasonable trade, I would say, and medium term, put it that way. Yeah,
No,
you
I
know,
agree. This would be a 1.5 year hold, possibly an option play. I'll have to see. I'm gonna see how we go tomorrow. Now,
yeah,
it is still risky to buy now, just because the whole market in itself, as we saw, they dropped 50%, and it doesn't look like they should have dropped 50%, right? So they easily could
yeah,
drop another 25% just because the whole bank sector is a nightmare. So
yeah.
it's not as easy as like a TLT play, like a
Hmm.
bond play where we know eventually they have to go back up. So it's still iffy.
Yeah, and you're probably going to see, FRC is definitely heading the wrong direction. So you
They're
could
at
see some
five
certain
bucks.
contagion effect once FRC does the inevitable.
Yeah.
I think at this point, it's
It
wild.
it goes to show those two banks were clearly managed in extremely different ways, right?
Hmm.
PacW immediately jumped to get more cash right off the bat. I should have read what they sold, but they immediately went to get cash as soon as it happened. Theoretically, it's not like there's going to be no more regional banks. Like there's still going to be regional banks,
Oh yeah,
right?
absolutely.
But it could turn into like a 5 year hold just to get your money back. We just have no idea what's happening right now. It's kind of an issue. But I'm not gonna lie, if they go down like another 25%, I might get a little antsy.
I completely understand it. It makes sense. Who knows if we're right, but it does make sense.
No idea. All right, guys, have a good one.
Catch you next one.